Hello everyone, welcome to Finance by Avisha and Arpita. In today's video, we'll see how to read the annual report of a company. So, what is an annual report? Annual report is a quarterly publication by the company and is sent to the shareholders or other interested parties. The annual report is published by the end of the financial year, and all the data made available in the report is dated to 31st March. The annual report is usually available on company's website in the investors section as a PDF document, or one can contact the company to get a hard copy of the same. Since the company's annual report, whatever is mentioned in the annual report is assumed to be official, hence, any misrepresentation of the fact in the annual report can be held against the company. To give you a perspective, annual report contain the auditor's certificates, the date, seal, signed, certifying the originality of the financial data, including the annual report. Potential investors and the present shareholders are the primary audience for the annual report. Annual report should provide the most pertinent information to all investors and communicate its primary message. For an investor, the annual report must be dealt option to seek information about a company. Of course, many media websites claim to give financial information about the company. However, the investor should avoid seeking information from other sources. Remember, the information is more reliable if you get it directly from the annual report. Why would the media website misrepresent the company's information, you may ask? Well, they may not do it deliberately, but they may be forced to do it due to other factors. For example, the company may like to include depreciation in the expense side of the P&L, but media website may like to include it under a separate header. While this would not impact the overall number, it does interpret the overall sequence of data. Now, coming to the second point, what to look for in an annual report. The annual report has many sections that contain useful information about the company. One has to be careful while going through the annual report, as there is a fragile line between the company's fact and the marketing content that the company wants you to read. Let us briefly go through the various sections of an annual report and understand what the company is trying to communicate in the annual report. For the sake of illustration, I have taken the annual report of Amara Raj Battery Limited belonging to the financial year 2013 to 14. As you know, Amara Raj Batteries Limited manufactures automobiles and industrial batteries. You can download it from the company's website. Please remember, this chapter's objective is to give you a brief orientation on how to read an annual report. Running through every page of an annual report is not practical. However, I would like to share insights into how personally I would personally read an annual report and understand what kind of information is required and what information we can ignore. To better understand, I would urge you to download the annual report and go through it simultaneously as we progress. The annual report contains 9 sections: financial highlights, the management statement, management discussion and analysis, 10-year financial highlights, corporate information, director's report, report on corporate governance, financial section, and notice. Note, no two annual report are the same. They are all made to suit the company's requirement, keeping in the perspective that the industry they operate in. However, some of the sections in the annual report are common across annual report. The first section in the annual report is the financial highlights. Financial highlights contains the bird's eye view on how the company's financials look for the year gone by. The information in this section can be in form of a table or a graphical display of data. This section of the annual report generally makes a multi-year comparison of the operating and the business matrix. So here you can see the snapshot of the same. So I think this snapshot is not saved, so I'll just include this snapshot and we can probably go through it and get a better idea about how we'll read this. So I'll just share this and we can learn through this. So here is the chart that we got. So you can see this chart. So as you can see, the details you can see in the financial section are basically an exact form its financial statement. Basically it's little glimpses of how the company has been working so far. Along with the extracts, the company can also include a few financial ratios calculated by the company itself. I briefly looked through this section to get an overall idea, but I won't say I like to spend too much time on it. The reason for looking at this section briefly is that I would anyway calculate these and many other ratios myself, and while I do so I would gain greater clarity on the company and its numbers. Over the next few videos, we will understand how to read and understand its financial statement and how to calculate the financial ratios. The next two sections, that is the management statement and the management discussion analysis, are quite important. I spend time going through these sections. These sections give you a sense of what the company's management has to say about the business and the industry in general. As an investor or a potential investor in the company, every word mentioned in this section is important. In fact, some of the details relate to the qualitative aspect, as we discussed, can be in the second section of the annual report. In the management statement, sometimes called the chairman's message, the investor get a perspective of how the man sitting right on the top is thinking about this business, his business basically. The content here is usually broad based and gives a sense of how the business is positioned. When I read through this section, I look at how realistic the management is. I'm very keen to see if the company's management has its feet on the ground. I also observe if they are transparent in discussing what went right and what went wrong. An example that I explicitly remember was reading through the chairman's report um, of a well established tea manufacturing company. In his message, the chairman was talking about revenue growth of nearly 10%. However, the historic revenue suggests that the company's revenue grew by 4 to 5%. Clearly, in this context, the growth rate of 10% seems like a celestial move. This also indicates that the men on the top might not really be in sync with the growth reality. So I decide not to invest in the company. Retrospectively, when I look at my decision not to invest, it was probably the right decision. Here is the Amara Battery Limited. I highlighted, okay, it was there. I also highlighted a small part that I think is interesting. I would encourage you to read the entire report in the annual report. Moving ahead, the next section is the management decision and analysis, or MDNA. This is my opinion and perhaps one of the most important section in the whole of the annual report. The most standard way for any company to start this section is by take talking about the macro trend in the economy. They discuss the overall economic activity of the company and the business sentiment across the corporate world. If the company has high exposure to exports, they even talk about global economic and business sentiment. The basically ARBL has both exports and domestic interest, hence they discuss both these angles in the annual report. You can see the snapshot below. um then the company's view on Indian economy can be seen here. And following this, the company usually talk about the industry trend and what they expect for the year ahead. This is important section as we can understand what the company perceives as threats and opportunity in the industry. Most important, I read through this and compare it with its peers to understand if the company has an advantage over its peers. For example, if Amara Raj Battery Limited is a company of interest, I would read through this part of annual report and read through what exit batteries has to say in their the annual report. Remember, until this point, the decision in the management and the discussion and analysis is broad based and generic: global economy, domestic economy, and industry trend. However, in future, the company would discuss various aspects related to its business. It talks about how the business has performed across various divisions, how it fares compared to the previous years. The company, in fact, gives out specific number in this section. So here is another snapshot of the same. Some companies even discuss their guidelines and strategies for the year ahead across various verticals. Do have to look at the snapshot again. Here you can see, after discussing these in management discussion and analysis, the annual report include a series of other reports such as HR report, R&D report, technology report, etc. Each of these report is important in the context of the industry the company operates in. For example, if I am reading through a manufacturing company annual report, I would be particularly interested in human resource report to understand if the company has any labor issues. If there are serious signs of labor issues, it would lead to factory being shut down, which is not good for its shareholders. Now, coming to the third bit, the financial statements. Finally, the final section of the AR contains the financial statement of the company. As you would agree, the financial statements are perhaps one of the most important aspect of any annual report. There are three financial statements of the companies will represent mainly the P&L statement, the balance sheet, and the cash flow statement. We will understand each of these statements in detail over the next chapters. However, it is important to understand what the financial statement come into two forms at this stage: the standalone financial statement or simple standalone number, and consolidated, the second one would be consolidated financial statement or simply consolidated numbers. To understand the difference between standalone and consolidated number, we need to understand a company's structure. Typically, a well established company has many subsidiaries. These companies also act as a holding company for several other well established company. To help you understand this better, I have taken the example of Crisil Limited shareholder company. You can find the same in Crisil annual report. As you may know, Crisil is an Indian company with major focus on corporate credit rating services. As you can see in this, the Standard and Poor S&P, a US based rating agency, holds a 51% stake in Crisil. Hence S&P is the holding company and the promoter, or the promoter of Crisil. Public and other financial institutions hold the balance of 49% of share of Crisil. However, S&P itself is 100% subsidiary of another company called McGraw-Hill Company. This means McGraw-Hill fully owes S&P, and S&P owes 51% of Crisil. Further, Crisil itself fully owes 100% shareholding among company called Irvana. Keeping the above in perspective, think about this hypothetical situation. Assume for the financial year 2014, Crisil makes a loss of rupees 1000 crores and Irvana, its 100% subsidiary, makes a profit of 700 crores. So what do you would be the overall profitability of Crisil? Well, this is quite simple. Crisil on its own made a loss of 1000 crores, but its subsidiary made a profit of 700 crores. So overall PNL of Crisil is 100 crores plus 700 crores, the negative of 1000 crores, and it comes out to be 300 crores. Thanks to its subsidiary, Crisil loss is reduced to 300 crores instead of massive loss of 1000 crores. Another way to look at it is the Crisil on a standalone basis made a loss of 1000 crores, but a consolidated basis it made a loss of 300 crores. Hence, the standalone financial statements report the company's standalone numbers, financials, and do not include its subsidiaries' financials. Hence, the consolidated number include the company's, that is standalone financials, and its subsidiaries' financial statement. I personally prefer to look through the consolidated financial statement to represent the company's financial position better. Now, coming to schedules of financial statement. When the company reports its financial statement, it usually report the full statement and they follow it up with detailed explanation. Have a look at the snapshot of Arbl financial statement balance sheet. Each uh, particular in financial statement is referred to as the line item. For example, the line item in the balance sheet under equity and liability is the share capital as pointed out in the green arrow. If you notice, there is note number associated with the share capital. These are called the schedule related to financial statement. Looking into the above statement, ARBL states the capital stands at rupees 17.071 crores, that is rupees 170.81 million. As an investor, I would obviously be interested in knowing how ARBL arrived at rupees 17.081 crores as their share capital. To figure this out, one need to look into the associated schedule note number 2. Please look at this snapshot. Of course, considering you may be new to financial statement, jargons like share capital makes much sense. However, the financial statement are straightforward to understand, and over the next videos we will understand how to read the financial statement and make sense of it. But for now, remember the main financial statement gives you the summary and the associated schedules given the details about each line item. So, the key takeaways from this video are: the annual report of a company is an official communication from the company to its investors and other stakeholders. The annual report is the best source to get information about the company. Hence, annual report should be the default choice for the investors to source company related information. The annual report contains best section with each section highlighting a certain aspect of the business. The annual report is also the best source to get information related to qualitative aspect of the company. The management decision and the analysis is one of the most important section of the annual report. It has the management perspective on the country's overall economy, their outlook on the industry they operate in for the year gone by, what went right and what went wrong, and what they foresee for the year ahead. The AR contain three financial statements: P&L statement, balance sheet, cash flow statement. The standalone statement contain the financial number of only the company into consideration. However, consolidated number contains the company and its subsidiaries financial numbers too. So, this is all about how to read annual statement of a company. We in the subsequent chapters we learn how to read the financial statement. If you like the video, hit like and please subscribe to the channel. Thanks for watching. Bye bye.